Very good evening to all of you. On behalf of Auditing and Assurance Standards Board of Institute of Chartered Accountant of India, I welcome you all in today's 165th CP program in the form of webinar organized by AASB of ICI for this council year. It is my immense pleasure to share with you that today is 165th CP program organized by AASB of ICI. And again, topic is very important, that is the dose charge-based governance communication with those charged with governance. And in order to tackle this very important topic, we are having with us C. Ashish Gupta ji. So, on behalf of AASB of I extend my warm welcome to you, sir, on this AASB platform. Welcome to you, Ashish ji. I also welcome today's moderator, C. Kapil Bagaria ji. He is a very learned, very respected from our own chartered accountant fraternity. So, I also welcome on behalf of AASB of ICI, C. Kapil Bagaria ji as a moderator of today's webinar. So, Honorable Chairman Sir and Vice Chairman Sir both are stuck up in another meeting. So, I'm taking this liberty to start today's webinar. So, I request Kapil Bagaria ji to please start the further proceedings of today's webinar. Over to you, Kapil ji, please.
Thank you, Anilji. Thank you. Uh, Good afternoon, everyone. It's an absolute honor to welcome you all to this insightful webinar hosted by ICI and AASB board. Today, we have an enriching session planned for all of us on the topic of those charged with governance, TCWG. And by the way, this is 165th event of this council year. So many kudos to, and congratulations to the board, the committee, and the entire team. Before I introduce our esteemed speaker, let me take a moment to highlight the significance of today's topic. TCWG refers to the individuals or groups responsible for overseeing an organization's strategic direction, financial reporting, compliances, accountability. This topic is particularly relevant in today's dynamic business environment where governance practices play a crucial role in building stakeholder trust, ensuring ethical conduct, and promoting sustainable growth. So, throughout this session, we will gain deeper insights into the roles, responsibilities, and challenges faced by TCWG, as well as practical guidance on strengthening governance framework. Uh, now it's my privilege to introduce our speaker, Mr. Ashish Gupta, whose wealth of knowledge and experience in audit domain will undoubtedly make this session highly valuable for all of us. Ashish is a graduate from prestigious Sri Ram College of Commerce and began his professional journey interning in an audit firm, one of the large audit firm in Delhi. Currently at Walker Chandok and Company, he has garnered extensive experience auditing some of the largest companies in India across various sectors. His expertise and hands-on experience make him an authority on governance and financial reporting topics. So, without further delay, I invite Mr. Ashish to take on the floor and share his valuable insights with us. Over to you, Ashish.
Thank you, Kapil, for your. I mean, you've also got massive experience of so many years with another large audit and accounting firm. So I lean on you as well in case there are certain questions that I find difficult to answer. It's something that I lean on to you, and I think I agree. I echo that. It's amazing that how AASB is completely transformed learning for our members. I think one of the things that we would, I mean, I think we all as members can do at least is share experiences of whatever we do as part of our daily lives as practitioners. Again, not to have a one-side conversation, but also have a two-way conversation, because there's a lot of things that we learn on a daily basis from various practitioners. It's a continuous journey of learning. I think that's what I truly believe in, and therefore I'll be leaning on to you, Kapil, and also to the fellow practitioners, members, students who are attending the webinar today, to please post your questions And do not hesitate, about as many questions you want to post, please post. I'll be more than happy to sort of take them up and clarify and also learn in the process. What we'll do is that, I will, of course, try and cover my side of monologue by 5:30, and then we'll open up for the question answers for the remaining half an hour that we would have post that. Uh, so I think just picking up from what Kapil mentioned, there is a significant realization amongst investors, users of the financial information, other stakeholders like government, the role that the board, the audit committee, and some of the key management personnel in an organization play, whether it's just the conduct of the information or of the organization, and also both in terms of the dissemination information, integrity of the information, and the follow-up of the information. So given the significance that's there, it is absolutely critical for us to understand what we as practitioners, audit practitioners, need to do in an audit situation. Now, as you all aware that an audit of the financial statements is not a tick in the box exercise. There is a massive trust that the stakeholders are placing on us, on the fact that we are doing our work diligently, and that what we are writing in our audit report is reliable. And through that audit report and reliance on that audit report, the financial information the company is disclosed or is disclosing either on a quarterly basis or an annual basis is reliable, and it's worth considering, and it's worth you need assuming it to be true and fair. So therefore, that casts a significant responsibility on us as practitioners to make sure we do enough as auditors, gather sufficient and appropriate audit evidence to be able to opine or conclude, as the case may be. If it's a review, then it's a conclusion of sorts, right? Now, in doing so, one is, of course, looking at information, looking at performing procedures. But one of the very important elements, and I've at least experienced in my career thus far, one of the most common area that we forget is conversation with those charged with governance. That's the least focused area by us, by practitioners thus far. And there's something that even NFRA, over the last couple of years of their review of the audit firms, audit files, talking to different stakeholders, have realized. I'm sure you're all aware of the fact that NFRA recently, besides of course talking to the audit firms, has also had a dialogue with the audit committee and board members. And one of the things that came out very specifically is that the level of engagement and interaction that is there between the audit committee and the board and the auditors is extremely minuscule. It's something that is desired. That is something that is still not up there of the gold standard that we all aspire to get at. I can't really think of giving an audit opinion or writing a conclusion without really having an adequate conversation with those charged with governance. And I'll tell you the reason why. The reason essentially is that we as auditors are external stakeholders, right? Of sorts, in the sense that we are not internal to an organization, right? We are acting on behalf of the shareholders. Our report is going to go to the shareholders or to the board if it is on a quarterly basis, right? And the same role is what the directors are also essentially playing. They're also playing a role where they have to answer to the shareholders, because they are eventually appointed by the shareholders to be their eyes and ears, right? Because the shareholders cannot operate a company unless, of course, it's a promoter. But generally, the shareholders cannot operate a company, especially the minority shareholders. So they appoint directors. They appoint their people who can be their eyes and ears to see, to oversee, to govern the management actions, to hold them accountable to for not just their actions but also what they report through their financial statements. Now, so given the fact that there is similarity conceptually of what ultimately responsibility of the board is, and to what we are also, especially around the financial reporting, it is absolutely important that both the board, the audit committee, the directors, and us have a regular and frequent conversation to make sure that we are understanding the information provided to us by the management comprehensively. Second is that we are negating any lost in translation situations where information is provided by the company either to the board, not to us, or to us, but not to the board. So I think, therefore, it's absolutely important that for us to ensure there is integrity of information, there is accuracy of information, there is completeness of information. Our interaction with those charged with governance is absolute critical. Without that, you cannot really reach a conclusion or arrive at an opinion if it's a annual financial statements. So that's really the background. So therefore, it is this standard, which is an SA 260 under our auditing framework, is as important as any other standard, is as important as 220, 200, is as important as SA 500, 505, name it, it is as important as that, right? And coupled with 230, which is audit documentation, I think what I'm going to also talk about is that how you would essentially document. So there are three elements that I will typically try and cover through my session today. A is who's really those charged with governance, what should we be talking to them, how frequently should we be talking to them, and how we should be documenting that in our audit files for tomorrow to make sure that if a third person comes in, he or she is able to establish the fact that we've done our work diligently and we were right at the right conclusions given the information available at that time. So that's really the context of how I'm going to structure this. While I have a presentation, I have certain slides, but I'll try and share a lot of that I've learned over the last few years of my career or in my career in terms of where the common pitfalls are. So I'll try and do that. Kapil, just to let me know when my screen is up and running. Just 1 minute. Is it on now?
Yes.
Yeah, I think, yeah, it's on, right? And it's in
Yes.
the
Yes.
presentation
Yeah.
mode?
Yes.
Right. Okay, great. Thanks. So I think before we proceed further, I just want to reiterate the objective of this standard. The objective really is to have a two-way communication between the auditors, which is us as audit partners, audit practitioners, audit leaders, in an audit situation where we share our perspective of how we see an audit risk, understand from them what is their experience, knowledge of the operations of the company, the structure of the company, the governance of the company, the management function of the company. So it's really just making sure that we are having that two ways. So never a one-side conversation where we just go and present before the audit committee or before the senior levels of the management or before the board as case. It's basically as much a listening exercise as a presenting exercise. Second is that we have to understand that while we are having this sort of communication and conversation, it is important that you're able to also provide your observation. And I'm very I'm consciously emphasizing on this, that it's my screen is visible, right? Kapil, I seem to not have that. Yeah. Okay. So is observations arising from the audit. Now, a typical scenario is that only when there is a qualification or there is any other modification or an emphasis is where we have to go and talk about. If there is an issue that we have to, or something that, we have to go and talk about it. That's not really the case. I think the case is that it's important to understand that information that needs to be exchanged with the with those charged with governance, specifically as part of around the audit of the financial statements or the information, does not necessarily only include these qualification or these classified information or these matters. It also includes, for example, any internal control deficiencies. Of course, significant deficiency, material weaknesses should be communicated anyways, but also if there are deficiencies worth sort of noticing or worth informing. It also about how some of the improvement areas which are possibly highlighted in the internal audit reports, how they impact the financial statements or the financial reporting of the company, and how would you deal with them going forward. So therefore, please do not consider to say that the standard only deals about one-way communication. It only talks about once you have a qualification, once you have information that is of that nature that can be good, that can be shared or that should be shared. No, that's not really the objective. The objective is to promote two-way communication. The objective is to make them aware of the observations that you've had through the process of the audit, to make them aware of what's your role, to make them aware of what's their role, and also more importantly, and secondly, is make sure that there is adequate documentation. You put all of this together in a nice manner to evidence that you've done a extensive communication with those charged with governance. So that's really the objective of the standard, and we try and cover that through practical instances. The first and the foremost question, which again is a very commonly misplaced situation, is what is those charged with governance? How is it defined? Does it only mean audit committee? Does it mean independent directors? Does it mean the entire board? Does it also include senior members of the management? What does it mean? And I'm again one of the things that even NFRA has highlighted as part of their reviews is that very commonly this is the most commonly misunderstood definition amongst the audit practitioners and also amongst the regulators at times. They've acknowledged that fact through multiple communication, and in fact, even including the recent one that has come out, right? So I think first of all, we have to understand that those charged with governance is not only confined to an individual or a group of individuals. It is basically confined to people, groups of people who are given specific tasks to govern an organization, to conduct operations of the organization, who are senior enough to make relevant decisions. So while you define who's charged with governance, you have to look at these 3-4 aspects. One is who's got the respective responsibilities of really the governance. Second is who are the key people in the organization who are to be taking decisions impacting the organization, its financial reporting at the highest level, right? So if you were to consider that, and third, I think more importantly, is who in the lives of law and regulators is seen as really running the company, running the operations of the company. Is it the CEO? Is it the MD? Is it the chief operating officer? Is it the chairman of the board? Is it the chairman, of a particular committee, like a risk committee or whatever? Who is that person? Who are those group of people? Who are those individuals who are essentially running? So those charged with governance is not necessarily only audit committee. It includes the board of directors. It also includes the senior management of the management personnel of the company. So typically, CEO, MD, board chairman, board of directors, audit committee members are who are basically classified as those charged with governance. So therefore, whenever you have communication, you should not confine yourself to saying, if I have spoken to the audit committee chair, that's good enough. I have complied with SA 260. The answer is no. You have to ensure that you are talking to all the relevant people in the value chain, which is, as I said, senior management of the team or of the company, the board of directors, the audit committee members as well. Now, you may come back and say here, board of directors at times, our presentation to the audit committee, how do you ensure that, you're talking to the board of directors and so on and forth. So you can use a medium of audit committee eventually to talk to the board. But that doesn't mean that, you can just ensuring that, you've spoken to an audit committee chair or made a presentation to the audit committee is in compliance. How to address this essentially is make sure that your presentation addresses to the entire board. It does not only address to the audit committee, one. Second is make sure that your presentation is circulated to the entire board, not just to the audit committee. Third is that when I'll talk about different times of conversation, try and have and insist that you would like to meet board of directors at least once a year, if not every quarter, at least once a year, where you can have and you can share what is it that you've gone through in terms of the audit processes, what is it that you believe are the key audit risks, understand from them how they're functioning as a board, how they're really relying on the management, what are the areas that they're seeing as a focus for themselves, right? So at least have that communication and ask them very specifically that is the communication that you're having with the audit committee adequate enough formed from a board perspective? Is there anything else that you would like to see? So if you were to address these aspects, then I think you will tick that box of who's really TCWG and how you should be sort of identifying that. I think the other element of conversation, especially when you're dealing with the standard, is the form and timing of communication. And we've seen very common issues that I have prepared a presentation at the end of the quarter or the year. I have told the audit committee that these are my audit procedures, these are my observations, and that's it. These are my conclusions, right? Is this not good enough under the standard? What else do you want me to do as an audit practitioner? I've prepared everything. I did my audit. I summarized my findings, sat with the audit committee chair or the audit committee, gave them my presentation, and that's good enough. Is that not sufficient under SA 260? The answer is not sufficient under SA 260. And that's something that NFRA has been reinforcing through the latest paper as well, that the timing of the communication cannot just be the year end or the quarter end. It cannot be just like that. It has to be a far more inclusive, indulging conversation with those charged with governance. That's very, very clear. And I will come to that how to improve the timing. The second is what should be the form of the communication? Should be oral, should be writing, should be both, should be emails, should be like a written letter signed on a letterhead. What should be the way of communication? I think the answer there is that any communication which you can evidence in your files, right, is an acceptable form. Generally, oral communication is very difficult to document unless you were to have a conversation through a Teams or a Zoom call, summarize the minutes, circulate those minutes to the audit committee, and get their sign off on the minutes. Then you're documenting the oral communication. So you can have oral communication the way I just described. Otherwise, you should insist on a written communication. That's, in my view, is a better form of communication. Whenever you do any oral communication, just make sure that you minute that conversation and circulate those minutes with a clear understanding with the audit committee that they would revert on that to say that they either confirm or they modify those minutes to what they believe was discussed during that conversation. So the form of the communication is important, which you should consider. Timing, coming back to the timing of it, as I said, you cannot just only have the once end of the quarter conversation. I think you should spread out your conversation to include the following. First is whenever you plan for the audit, you should have, let's say it's an unlisted company. Whenever you plan for the audit, you should make sure that you send out a communication to those charged with governance about that this is what you believe are what could go wrong risks under SA 315. Let's say this is how you want to respond under SA 330. This is how, you possibly looking at materiality under SA 320. These are the special areas of attention that you would want to devote your time on. So create an audit plan and make sure that you circulate that audit plan with the audit committee before you even commence your audit. Again, it should not be a checkbox approach that, you've done with your physical count, let's say of the 31st March, and in April you are sending communication to those charged with governance saying that this is what my planning, this is what I'm planning, how I'm planning to execute my audit. Then it has no meaning, because then you're only doing a tick in the box. So the timing is very important. So as soon as you're planning, and I'm sure you don't plan your audit after the year end, you plan your audit well before the year end. That's how you carry out inventory counts and so on and so forth. So whenever you plan for the audit, make sure that that planning file is included and sent to those charged with governance specifically uh, in a written format. That's one. Second is that you should break down your audit into routine matters and non-routine matters. For routine matters, you know, your planning file and other things will will sort of take care of the timing. But for non-routine, let's say there is, God forbid, a 143.12 scenario where there is a whistleblower, and you believe that there is a potential 143.12 instance that could come in. 143.12 for practice is basically a scenario under the Companies Act where the auditors have to write to the central government for certain class of companies if their threshold goes believe, and if where you believe that there is a reasonable cause uh, that there's likely a fraud that has happened at the company or your audit client beyond the threshold mentioned in the act, which is 1 crore rupees. So 143, if there is a 143.12 situation, you can't wait for the year end to happen. It has to happen as and when the event has occurred, or you are made aware of that event. For example, let's say there is also something very dramatic has happened. Let's say there is, an allegation against the company by any department. Let's say if there is any significant court ruling that could impact the company operations or its ability to continue as a going concern, whatever. If wherever there are these non-standard non-routine transactions, you have to make sure that you do not wait for the quarters or you do not wait for the year end to complete, and then you sort of take up the matter. You have to communicate as and when those matters are happening. In fact, just to give you information, and I'm sure you're aware that if there is a 143.12 situation, there is a timeline defined under the Companies Act in which the auditors have to have a communication with those charged with governance, right? Especially the audit committee and the board. So just make sure that you bifurcate your audit into routine and non-routine. Non-routine transactions, identify which one are the ones of relevance that needs to be communicated define that relevance, agree that relevance with the audit committee or the board to say that you believe these are 10 matters. If they happen, you will write to them, you will speak to them, you will have a communication with them, be it a significant acquisition, be it a 143.12 situation, be it any regulatory action of substance, be it any significant regulatory update that could substantially change. I mean, classic case being that I'm sure you're aware, last to last year, I think the government certainly levied huge GST on gaming companies, and that is quite frankly existential for gaming companies, for their litigating before the Honorable Supreme Court. But that's really existential for those gaming companies. Then you have some of these regulatory actions or regulatory events. You can't really wait for the quarter or the year end to say that, hang on, this is your assessment. It's important that you go back to first the management to understand what is their view on this, and have an interaction with the audit committee and the board to understand if they've really realized the gravity of the situation and lean on to them to make a conclusion or draw out a conclusion that how this will impact your 315, your 330, and even your 700. Could be a 706 or could be a 705 situation. So whatever that could be, but unless you have a communication, you would not, or at the appropriate time, you would not be in a position to reach to a direct or to a right answer. So therefore, it is important you please identify those non-routine transactions, communicate that with the board, that these are, if there any of these events happen, we will immediately speak to you, we will write to you, and we will seek your wisdom and intervention at that time. I would just reiterate for all of us that you know one of the things that at least in my communication personally, I've noted that there is a lot of gap between the understanding of what we believe is an audit and what the board at times believe the auditors should do. And that is really coming from the fact it's not because of ignorance or whatever. It's just because of the fact that while we understand auditing standards, while we understand accounting standards, the board may not have those relevant skills. Yes, some members of the board ought to have that as part of the audit committee, but not everyone. So therefore, it is important that you reiterate what is your responsibility uh, as auditor, how different that is to, let's say, an internal auditor, how different that is to, let's say, a secretarial auditor. What is it that you are covering? What is it that you're not covering? What is it that is mandated under law for you to report on? Let's say, what are your 143 obligations, where you're reporting on legal and other regulatory matters beyond the financial statement. So it's important that you make those charged with governance really understand what is your responsibility. So when you talk about the form of your communication, or what should be the content of your communication, rather, I think I should use the word content of your communication. The first and most foremost that you should communicate either through your quarterly meeting or separately is to make them aware that here is your responsibility to opine on the financial statements or conclude on the financial results of the company. In doing so, this is how you've gone about addressing your identifying the risks and addressing your procedures, right? So that's again why I'm emphasizing on this is that we've seen many a times where the members will come back and say that boss, I don't understand what you're talking about. Uh, I thought that you would give me a complete assurance on that the company will be able to continue as a going concern for next 10 years, right? So please give me that assurance. Or where they'll come back and say that, boss, please tell me that all liabilities have been accounted for, or that all communication has been provided to you. So wherever there are these open-ended questions and all, it's important to take them back to what are the auditing standards requirement, what is your responsibility under the auditing standards and the act, and how you're fulfilling them, right? So it's important to just go that back and explain that to them. The second aspect or content, I think, which you should really emphasize in while having a conversation and communication with those charged with governance is that, which I think just touched upon, is the scope and timing of your audit. Again, we've all read in the auditing standards that you will arrive at the right conclusion or a right opinion if you scope the audit right and you've timed the audit right. So if you were to, let's say, have an inventory count in September, right, for March year end, do you think it's the right timing of that audit procedure? The answer is no, right? What if you were to have a audit, let's say a balance circularization of debtors, creditors in November of the previous year for the 31st March of the subsequent calendar year? Will that be the right timing? The answer is no, right? So it is very important that the first and the foremost thing that you should communicate as part of your planning conversation is what is the scope of your audit after you've explained them your responsibility as auditors, the scope of the audit, and how do you plan to execute that scope, especially the timing of the procedures that you will do, right? Of course, you'll have to talk about the sufficiency of the procedures and the appropriateness of the audit procedures. That is that is there. But quite frankly, the sufficiency and appropriateness of the audit procedures is your response, your call, right? Even the timing is your call, but there are instances that where intervention of those chartered governance can help you improve the timing of the procedures specifically. And I can tell you that where there are circumstances where information probably is delayed to you or whatever, you believe that there is a delay information because of which you cannot perform an audit procedure in the time and the manner that you should be performing. Common conversation with those charged with governance and the board has immensely helped you change that and arrive at the right conclusion of that. So draft a scope, give that scope to the audit committee, have an engaging conversation to say, basis your understanding of the company, of the operations of the company, of the risk associated with the industry in which the company operates, risk associated with the manner the company operates in that particular industry. This is what you believe could go wrong under 315. This is what you believe that are the controls that the company has put in place to mitigate those risks. This is what you believe you're going to respond by performing, either sample procedures on or special purpose procedures or whatever, right? So that's the way you should. And then once you engage in a conversation, I'm telling you, you will be surprised to know that how frequently and how confidently people will come back and give you very insightful information. I'll give you one instance. We were just stepping into an audit, and as part of the first thing we did was that when before we even signed off the first quarter, we set up a conversation with the entire board, explain them, what is your role, how you're going to transition the audit from the incumbent to us as the new auditors, and after that, just left 45 minutes to hear from them what is their view of the company, their operations, and stuff like that. And when we heard them, literally we had to change our entire transition plan. Complete transition plan had to change. So instead of focusing on 10 things, we confined ourselves to just 5 things, which were the most important, which eventually helped us transition well, which eventually helped us reach the right conclusion for that review. It was a quarterly review scenario. So once you put the scope out, once you put the thing out and leave it to them, you will hear from them. And I'm telling you, this will really help you significantly as an audit practitioner. It is also important that whenever you have that communication, don't leave it open-ended. Try and have a conclusive kind of a document. So you should not say that, yes, you will do client acceptance procedures, you will consider independence, you will consider performing some interim procedures, you will consider involving valuation experts. These are all open-ended statements. You should go with a very concrete, specific plan to say, you have done your client acceptance procedures. You've considered that, yes, you are qualified to be the auditors and continue to be qualified to be auditors. Second, that, this is what your preliminary risk assessment is. Please give us your feedback. Third, this is how you plan to perform different audit procedures and the timing of those audit procedures. This is where you will possibly use valuation or other experts, from your as an auditor expert. And this is where you believe the timelines are likely to be of execution of the audit. So it's like once you give that complete plan, I think A is not just only compliance of SA 260, but trust me, even the trust between yourself and the board will significantly enhance, which will only improve the quality of the work that you'll do. Right? So just make sure that you have that fairly well crafted in the document. Of course, once you've done this, the other thing that you will typically communicate with them is what are your significant findings from the audit and or the review, right? And how you've concluded on that finding. Now, again, it looks very cliched. The simple thing people can come back and say, I have 20 observations. Should I put all the 20 observations? How should I differentiate or distinguish and identify which information is relevant to be disclosed or to be discussed or to be having a conversation with the with those charged with governance, let's say the board or the audit committee, right? I've only put down some of the very illustrative sort of matters, but I'll give you a basic crux. The basic crux is wherever you believe there are significant areas of management judgment, right? Where there are, let's say, contingent liability conclusion. Let's say there is a litigation matter going on, and the fact that whether there needs to be a provision, needs to be disclosure, or neither is dependent on, it's a judgment involved, is dependent on management judgment. Some of these matters, which are based on significant judgments or estimates, you should definitely communicate, irrespective whether you have an observation there or not. Second, you should be very clear in putting down the key audit matters. If it's a listed company, if it's not a listed company, then the audit matters are not per se applicable. But the key audit matter is something that you should definitely put down as your mandatory communication with the TCWG. And what that could be, if again, whether you have observation or no observation, you should have that very clearly in the communication to say, we performed the procedures. We believe these were, or we've got our risk assessment. We believe these are the 5 or 4 or 3 or 2 significant audit matters, and this is how we plan to address them. This is how we've addressed them. So while what you've planned to address them would have been disclosed to them at the planning stage, how you've done that and what have been the findings of it, if there are any, should come out very clearly in your communication, right? As I said, even if there is finding, of course, even if there is no finding, you should just say that this is what we had planned, this is what we've done, and we do not have anything substantive to report on that. Why I'm insisting on this is that whenever you have a more structured and a detailed and a conversation with them, not only it gives them confidence, it gives you an opportunity for any feedback that they may have, which will impact your opinion before you sign off. It's a very good way of even reassuring yourself that, boss, I have communicated everything possible, right? I am, and transparently in a simple language, that in case there have been any observation, I've given that opportunity to them to comment. If they have commented, I'll only benefit because it will help me resolve my audit opinion or arrive at the audit opinion appropriately. Otherwise, tomorrow nobody can fault me that I did not communicate adequately. So it's a very essential element, helps you in eventually not just, as I said, compliance with standard. It also helps you regain trust and also conclude on your opinion appropriately, right? The other thing that you should mandatorily communicate is areas such as wherever you've involved an expert. Let's say there is an impairment of either financial asset or a non-financial asset. There's a material, let's say a goodwill line in the consolidated financial statements of your audit client, right? The management ought to test that goodwill for a impairment on an annual basis. Now, you believe it's material enough, therefore you've involved your valuation expert to test the management assumptions and all. So wherever you're using these valuation expert, or for that matter, if there is a tax position, uncertain tax position, you've used your tax expert. So wherever you're using your expert, include that mandatorily. Again, even if there is no observation. That's my suggestion to you. What it does, again, it presents the significant expertise the firm has to lean on whenever matters of such significance or such relevance arise. Second is it gives an opportunity for your experts to be present before those charged with governance. So tomorrow, let's say you were to rotate out of the audit, you can always lean on to their experts to build on the non-audit services with that client. So it acts as a very good marketing, or let's say a selling point for you as well. So so I've always found that to be fairly constructive. because the board also likes to listen about the tax from a tax expert, not you. Board would like to hear from on a valuation matter from a valuation expert, not you. So it just adds to the quality of the conversation, and it, as I said, provides you a great marketing or selling platform. Should you were to rotate out of the audit at any point in time. So therefore, please mandatorily include that. Right. The third thing you should mandatorily include is your extent of audit coverage. So in a component audit situation, let's say you are the principal auditor, and there are certain components which are being audited by some other firm. In that case, it's important that you highlight to those charged with governance as to what is the percentage and extent of work that you've done directly, what is the extent of work that you've relied on the component auditor, and how you've relied or placed reliance. Why this is relevant is that, again, it's important for the board and the audit committee to understand what is the extent of diligence that you as a principal auditor have done when you're signing your audit report. Second, anyways, as part of the new SA 600, which NFRA released a couple of months back, it is absolutely important that you have that communication with those charged with governance. So that anyways is now part of it's part of law, irrespective. But that's something that you have to mandatorily include even if there is no observation. So you want to have these 3, 4, 5 things. So auditor's responsibility, areas of settlement judgment or estimates, key audit matters, wherever you've used experts, IT, valuation, income tax, and also component audits, wherein it's a component audit situation. So whenever you've had these 5 situations, you should include them mandatorily, irrespective of whether you have finding or not. That's the first thing. The second important thing is the question that you could have is key, to my earlier example, you have 20 observations in an audit. Should you communicate all the 20? The answer is no. You should communicate only those information that, in your view, are relevant for the governance, the governing body, the governance at that level. So, as you know, that whenever you perform an audit, there is a financial statement materiality that you determine. That materiality not only helps you scope the audit, but it also helps you conclude on the audit finding under SA using SA 450. So whenever there is a matter which is beyond trivial, you should accumulate all of them, right? And put them as part of your communication, because not just that, is a good practice, but also something that is required under SA 450, read with SA 260. So all your observations which are material, right, which are beyond trivial amounts, you should accumulate all of them and present to say, these are your observations. Some of them have been corrected by the management. Some of them have not been corrected by the management. The ones that have not been corrected by the management do not or have the following impact on your audit conclusion. The ones that have been corrected by the management have the following impact together with the uncorrected on the internal controls of the company. So communication on the observation, therefore, should be again a structured approach. First, identify your materiality. Determine what are your observations which are beyond the trivial amounts, right? Third, apply the aggregation criteria. Fourth, evaluate them under SA 450. Fifth, do not stop at just the financial statement impact, but also the potential internal controls impact. Sixth, put them together. From there, identify which one are individually to be stated. Let's say there is one material which was so material that required a qualification, either in the main report and or in the internal controls report. Second, what are the ones that you can aggregate and say that these are collectively indicating, let's say, a poor financial statement control close process, FSCP, and communicate as such, right? That's how you should be putting down your observations. I reiterate and rephrase that. Identify your materiality. which is there, of course. Put down your observations. Identify which of these observations are beyond trivial. Then you aggregate the ones which are similar, conclude them under 450. Put down also add the element of internal control, stroke fraud, stroke other elements, qualitative aspects of things. And then, identify how you would want to decimate them as clubbed if they're not material individually, but material together. Second, if it's individual, then present separately. So think from a board or a recipient of the information, this whole approach will look very structured, and that's how you should present it also. That you've made 20 observations. Basis your materiality, these 20 observations have come down to, let's say, 10 observations. Out of the 10 observations, these are the 2 observations which require a specific mention, and the balance 8 are aggregated, indicating not material though, but indicate possibly the company needs to strengthen their financial statement close process, for example. Right? So this is how you should communicate your findings to those charged with governance. Right. The other thing which I wanted to specifically highlight is the aspect, and this is increasing, and you've seen the example of a very large startup, which it was large at that time, ed tech startup, which went into a tumble, and there the auditors are finding very difficult to obtain information, or having a significant delay in information, or there was a potential limitation of scope. The question that arises again is that wherever you have the situation of difficulties, wherever you situation of information either being withheld or not provided to you, where you believe that that's really material enough, do not wait for the end of the for your this thing. Please communicate that immediately, and that communication should be very clear that this is what you have asked for. This is what how you followed up the information. This is not provided to you by the time, and therefore this could have an impact on how you conclude on the audit. A lot of times we miss out on this procedure, and we believe that only we will linger on and keep on insisting with the, let's say, the management to provide us the information, and and then conclude as and when information is provided, or if not provided, at the end of the audit procedures, or your audit cycle. That's not the right thing. Moment you notice difficulties, have one follow-up, 2 follow-ups with the management. If there is no response, write a letter to the audit committee members, or ask for a conversation with the audit committee chairman, or the audit committee, or even the board, as the case may be, and insist that this is what you're facing as a difficulty. It does 2 things. A, helps you hasten information at times, which will help you conclude the audit in time, save you cost, help you reach a conclusion faster. Second is that it will make the board aware in time that there is something wrong in the financial governance of the company. So in both of these situations, you will have a better result, where again, not just a compliance of the standard, but you'll end up having a better experience with those charged with governance. You'll get to a better answer eventually as part of the audit cycle. Right. The other thing we've noted, where people miss out, is that we only seem to highlight the key matters which are in the main audit report, and that too the true and fair view, which impacts the opinion. Either it's an emphasis of matter, or it's a qualification, or whatever. But we may not necessarily highlight the ones which are reporting, let's say, under 143.3, like the recent example of audit trail, right? Or if there are any matters that need to be reported on special circumstances, like loan taken on behalf of the third party, and so on and so forth, right? Or for that matter, Caro, right? Let's say there were observations in physical count of inventories which were more than 10%, which were subsequently adjusted, but they were observations of differences more than 10%. or for that matter, you did a physical verification of fixed assets, or management did physical verification of fixed assets, noted significant deficiencies or differences which were eventually adjusted, but you have to mention that, right, in your Caro report of, or let's say there are significant delays in statutory dues, or significant amounts outstanding, or short-term funds have been raised for long-term, short-term funds raised have been used for long-term purposes. Whatever be those, we've seen those are generally not communicated as part of your presentation. It is assumed that if you're giving an audit report, that is generally read. I would recommend that wherever there are observations in Caro, right, like as I mentioned, short-term funds raised for long-term, short-term funds raised and used for long-term purposes, or significant delays in statutory dues, or related party transactions not approved, or they're being not commensurate with with the size and nature of operations, or not in compliance with 188 or 177 as the case may be. Please highlight that specifically in your audit committee communication and mark it out as such. Do not assume that if you've given it in the audit report, that's going to be read per se. That's not an effective communication. Yes, you may assume that यार मतलब मैंने तो बता दिया, अब क्या बचा है इसके अंदर, मेरी audit report पढ़ लो. That's fine. But at the end of the day, audit report is also true and fair. That means that everything is fine. But that may not be the case, right? Your communication with those charged with governance cannot be like the shareholder. You've given the audit report, everything is mentioned in the audit report statutorily. That's all. You don't have to really talk about anything else. If there are questions asked, then we'll respond. That's not the case. With the board, you have to be as detailed as possible. So therefore, if there are any Caro observations, please put them down specifically and clearly in your communication. Something that is not done consistently, and that's why I'm reiterating a common pitfall that we do. Right. Right. I think the other thing that you should be communicating extensively with and timely with those charged with governance is your independence. Now, again, common issue. We believe that once we accept an audit is when we have to determine our independence, and when we have to issue a report is when we have to determine our independence, right? While logically, yes, but you have to make sure that you maintain independence throughout the audit period. So if you see the basic premise of, the framework given both under the Companies Act, Code of Ethics, and in ISBA code, or the code issued by the institute, is that you have to maintain independence throughout your audit period, which essentially means that in case you are providing any non-audit services, it's important that even if you believe that does not impair your independence, my recommendation is that before you provide any non-audit services, you should seek a prior approval of the audit committee or the board. In certain class of companies, that's a mandatory requirement where there is an audit committee, that you take a prior approval of the audit committee for provision of non-audit services. But certain classes of the companies where even if it's not mandatory, please make sure that the board of directors approve your non-audit services. Why I'm saying this is that independence is not just a form of it, it's also a state of mind, right? So you have to make sure that you remain in a objective state of mind throughout your audit period to be able to substantiate that yes, you've done your work as an auditor with full conviction and full objectivity in mind. Therefore, if there are any opportunities that come to your as an audit practitioner in your audit client where you've done an evaluation, do not just conclude that evaluation saying that you are independent and you'll inform the audit committee or the board at the end of the quarter or the year that you provided for these services. I think you should go back, prepare your evaluation, give it to the audit committee or the board as the case may be, get them to review this and approve it, to say that yes, they're also on the same page, and they believe also that provision of these services do not impair your ability or your qualification as an auditor or act as an auditor, statutory auditor of the company. So therefore, the timing of the independence communication, the manner of communication is very, very important here. So do not assume that you've concluded in your head you're independent You don't need to communicate that if there is any provision of services. The second thing is that, in your presentation, mandatorily you should include the fact either at the beginning of the presentation, let's say it's a quarterly or the annual presentation, either at the beginning of the presentation or at the end of the presentation, you should mandatorily include the fact, an assertion that you've evaluated these are the five non-audit services you provided during the year, which have been specifically approved by either the audit committee or the board. Other than that, there are no instances, to report, and the fact that you are independent with respect to your audit opinion. Right? That's a very important assertion to make, which you should assertively include either at the beginning of the presentation or at the end of the presentation. I think while this is really the broad sort of contours of what needs to be sort of included, I'll now take you to some of the best practices. Again, just a verbal sort of conversation in terms of uh, what good looks like, right? A good communication looks like in the following manner. A should be a two-way communication where you're not just giving answers, you're asking questions as well. You're asking questions, and I'll deliberate on each one of them as we go along. The second thing is that the timing of the communication has to be absolutely spot on. Means that you cannot have a scenario where you're communicating with those chartered governance after the financial year is over, your audit is substantially complete. That's not the right timing of communication. Third is that your communication should be broken down into routine and non-routine. Define the non-routine. Define the non-routine. That you would have a communication as and when those non-routine transactions happen. For the routine, this is how you will communicate. Planning, any significant difficulties, any other challenges, and at the conclusion. So define what's your routine, what's your non-routine. That's the third element. Fourth element, your presentation should be clear, should not be muddled with too many small things, but really more relevant, important things. I gave you examples of what are those 4, 5, 6 things that should mandatorily include. Make sure that you include them, right? That's the other thing. Fifth element is with respect to form of the communication. Oral, written, all are acceptable, no problem, provided the oral communication is followed up with the minutes of that oral communication, which are circulated to the members of the board or the audit committee with a specific response requested that in case you believe there is any changes, please respond by such and such date. If they respond, that's well and good. If they don't respond, at least you've done your part by communicating to them that yes, this is what you discussed, this is what you concluded, and this is for your information or inputs, right? So these are the 5 things if you were to do. Your communication with those charged with governance will be comprehensive and complete. I'll refer back to the aspect of the quality of the what is really the and one of the very common questions people ask is that if I were to have let's say send out an email, is that, or should I prepare a PPT or whatever, or should I do that? I think my suggestion there would be that you should prepare a structured presentation which just puts down all the thoughts and then in the manner that I've described and run it like a presentation. That's always preferable because it provides the right guidance to the members attending on the other side, and it also helps you put down what has been discussed when you minute it in your files. So that's, I think you should sort of consider. One of the last thing I want to consider before I open up for the question and answer is how do you ensure there is a two-way communication? So what are the questions that you should be asking, right? Should you be asking very routine questions? Should you be asking what is it that you should ask? How I have done that in my experiences that first of all, uh, do not hesitate to ask any question. I think mindset, it's a mindset issue. First of all, get your mindset absolutely spot on that they have the fiduciary responsibility as well. They are also overseeing the financial reporting independent of the auditors or of us. They are the ones who define the scope of the internal audit. They are the ones who are asking management more frequently, questions more frequently, and therefore they're supposed to know more information than we do. Ideally, because they have more frequent interaction with the manager, or supposed to have more frequent interaction with the management as well. So therefore, mindset is that you have to ask them questions and they have to respond to those questions. The pair of mindset, I think you should clear. A lot of times I've come back and said, and I've seen people who say, "Yaar, छोड़ो यार, why should I ask question? अपना बता के let's get over it." That's not the right approach. It's a two-way communication. Please ask questions. Have that mindset. Second is, what are the questions to ask? Following are the questions that you should anyways ask, irrespective, depending upon the situation. First is, what has been the level of interactions they've had with the company or the management? Is it quarterly? Is it annually? Is it monthly? Is it 6 monthly? What is the extent of information or let's say of interaction that they've had? First question. Second question should be, are they aware of any whistleblower or any matter of similar nature which they would like to share with us? Not what we don't know, because they don't know what we don't know, right? But something that has come to their attention, they would like to share with us. That's the second question that you should definitely, so that's a question that you should definitely ask. What are the matters that have come to your, so any events that have happened, any whistleblower has happened that they would like to talk about. The third is should be what is their level of understanding of the operations and the risks associated with the operations of the company. A lot of times you would find that companies operate under highly regulated environment. Let's say it's an insurance company, banking company, it's a pharmaceutical company, or it's operating in a highly regulated environment, let's say jurisdiction, right? It's important that you understand what is their or you are aware of what is their understanding of the operations and the risks associated with the operations. What this will help you? This will help you in revalidating your 3 and 5, that you've done the right risk assessment. Second is, it'll help you determine what are the critical focus areas of that the audit committee or the board are looking at the business. May not be for today, but maybe for the future also. So this will give you some very good insights. That's the third question that you should ask. The fourth question that you should ask and insist sharing or getting information is, what is their confidence level on the CEO, CFO, maybe CTO or CEO. So for whoever is the KMP, right? What is their sort of understanding of or the confidence that they have with respect to those, anything that they would like to share with us? I've come across situations where, when this question has been asked, some very insightful things come out. Insightful in the sense that, people might come back and open up to say that, while they have confidence that, but they would like, but they believe that, the person should focus on this, the person should focus on B or C or D. Those are your ABCD snippets that you should catch and do a 315 evaluation. And trust me, you'll end up identifying some very interesting areas to focus on from a statutory audit perspective. right? Or both from a financial statement or internal controls or financial reporting standpoint. So ask them that question. The other thing that you should also ask them is that how has been their experience of interaction with you as auditor? Would you like that interaction to increase? Would you like that either in terms of the content or the frequency of it, right? What's been their experience of that? What this does again is it helps you understand their point of view. It helps you understand how you should structure your conversation. It helps you build that trust with which helps in eventually communication or a trustful communication between both yourself and those charged with governance. So these are the few questions that you should definitely ask them in all of your audits, irrespective whether it's a listed company or not a listed company. Now, you may say, yeah, should I ask in every meeting? No, you don't have to ask in every meeting. Let's say once a year, you should definitely ask these questions. Every meeting, let's say every audit committee, max you can ask them a question is that are there any instances in the quarter or in the 6 month, whenever you are meeting, have there been any events that they would like to discuss with us? Right? One question on a recurring basis, but the 6 questions as I mentioned, at least once a year is what you should be asking. And trust me, when you see this, you'll find the level of confidence in both sides. Your confidence in them and their confidence in you will significantly enhance. And then that enhances your communication improves. When communication improves, the quality of your audit improves. Right? So these are the few things that you should sort of consider from a practical aspect. I will cover one last thing, sorry, before getting into question and answers, is around how do you document in your audit files, right? If you're using any audit software, typically an audit software will have elements of those charged with governance embedded into, let's say, planning, execution, conclusion, relevant stuff. But in case you're not using any audit, let's say an application or a software, but you're possibly using maybe Excel spreadsheets or hard copies to do that, always make sure that whatever you're communicating, there is a memo put down for every single communication, which describes basic stuff. When was the communication done? Who attended the communication? Whom is it addressed to? If it's an oral communication, who attended? If it's a sort of audit committee setting, then who attended? If it's a written, then it was addressed to whom? The fact that what was the matter that you were communicating, and then finally leave it there to say what has been your conclusion of that communication. Very common mistake that people make is that they do not document appropriately the communication with those charged with governance. So they'll do everything right. They'll ask the right question. They'll have the right timing of communication. They'll have the right presentation, content of the presentation. Everything is right. But eventually, if you're not documented it appropriately, it has no meaning. So what is important is that once you put that together, put it in a simple memo. No fancy fonts or required. Simple few things. Who attended, addressed to whom, matter discussed, of course, date, time, matter discussed, and more importantly, what is your conclusion of that meeting, of that communication? That should come out. So let's say you communicated, yes, we communicated the matter for this quarter, attended by 1, 2, 3, 4 people from the audit committee or the board on this date. These were the matters communicated. Attached is a presentation or a memo or a note. From the communication, you have not observed any additional matters that require further consideration, or you've noted following matters that require further consideration, which have been addressed in the following manner. That's the conclusion that you should put down very clearly and comprehensively in your audit files. If you do not do that, your documentation is incomplete, right? So So make sure that that's sort of done. Similar thing on the auditing, on the documentation side is, whenever there are these special circumstances, remember I talked about bifurcate your audit into routine and special circumstances. Whenever there is a special circumstances, is always a confusion that, how should I write? What should I write? Should I just write and have or just have a phone call, whatever. Whenever, as I described to you earlier, first of all, write down what your special considerations are, where you will have the discussion or communication with the audit committee or those charged with governance. Second is that uh, try and have written communication as much as possible, as much as possible. Third thing is that consider the timing of your, very, very important. Do not assume that you can communicate this later on. Let's first conclude or whatever. Don't wait for the conclusion. Don't wait for arriving at the conclusion and then say we're going to communicate. Event has happened. You may take time to conclude, but if it's of those items that you've defined, call for an audit committee meeting. Tell the management that you would like to speak to the audit committee chair and the wider, let's say, or the board chairman or whosoever that you believe is right, or you've determined that to be appropriate. Speak to that person saying, we have identified this matter. What is your view on it? Is your view uh, to carry out more investigation? Is your view is that potentially it was going to have this impact or that impact? What's your view? Right? Have the discussion. Then follow it up with your conclusion and have that conclusion also discussed, and in the process minute it properly, right? So wherever you have these special circumstances, do not wait for conclusions. Very common issue. Acquisition has happened, very material acquisition. This could have a significant impact on SA, your opinion on the consolidated financial statements, right? Let's us conclude it first, then we'll talk to the board later on, right? Or let's say a very material litigation outcome has come up. Let us first evaluate that, and then we will communicate. Don't make that mistake. Whenever you define these circumstances, make sure that you speak to the those charged with governance or have a communication with those charged with governance the time those happen, right? Not once you conclude on what should be done with them. Hear from them. What is their understanding? Are they aware of something of this sort has happened? A lot of times you'll find that they're not even aware, or they've not appreciate the gravity of what has happened. So it's always good and it's always advisable that you do that, right? So last but it's not the least is whenever you are maintaining sort of communication is never a right or a wrong. Should you talk in English? Should you talk in Hindi? Should you have this sort of manner or that manner? Doesn't matter. As long as you are making sure that you're communicating them frequently, you're communicating with them comprehensively, you are having a two-way communication, you're involving them, engaging them. That's all it is needed, and documenting it appropriately in your files is all it is needed, right? So that's all, I had sort of a couple, I thought I'll just put that down. I know I've sort of closed 10 minutes ahead of time, but that really is intentional to make sure, because the standard is more about setting the tone of the communication appropriately, rather than getting the as I said, the sequence theory, right?
Right. Thanks a lot, Ashish. It was quite insightful. In terms of question answer, there are a few questions on the chat board. I will read out each one of those. Some of those are already answered, but for the sake of completeness, I will read out everything and will leave to your judgment if you want to add something else as well. So the first question I have is whether to communicate with one-on-one basis with those comprising the TCWG or combinedly as a group.
Yeah, great question. I think generally you should do it in a group setting. Generally, except for situations where of certain very sensitive matters, and please define them specifically. And I'll give you an example. Let's say there is a specific whistleblower that has happened against, let's say, the CEO or MD of the company, right? Now, that's a very sensitive matter. You may want to have a one-on-one discussion with either the chairman of the board or chairman of the audit committee, if that if the chairman of the board is independent, non-executive, then that chairman of the board, otherwise chairman of the audit committee, specifically. That typically is important one-to-one communication because the other person may want to open up more specifically, which does not necessarily happen in open setting. Second is that that person may have maybe the right relevant person to conclude on that matter, or at least give direction to that matter, which the others may not have that relevance. Classic cases, whenever whistleblower complaint of a certain level, it is generally handled by either the audit committee chair or the chairman of the board directly. Now, if that is the person who that person is supposed to be giving direction, then having calling for the entire board may not be relevant at an early stage. It's better to have a one-on-one communication, understand what is their knowledge of the matter, what is their direction on the matter internally, and then take on the this going on. But again, generally have a setting, but for special circumstances, at times you may need a one-on-one communication. That's better.
Yeah, thanks. Uh, Second question is kindly related. What happens if one member of TCWG seeks information from the auditor in individual capacity, whether auditor should circulate the response to all the members or that member itself?
Uh, uh, Again, great question. Uh, you should avoid having any one-on-one, these kind of if there is a information, let's say one of the audit committee members asks you a question saying that you please tell me, if there are any, fraud matters separately, all of that. Do not indulge into, because these are official communications, right? Official communications have to follow a channel. They have to follow a process. They have to follow a methodology. It's important that you as an auditor, if you're responding as an auditor, you're not responding as an individual. I will not respond as Ashish Gupta. I'm responding as Walker Chandiok and Company LLP. When you're responding as an institution, you have to respond with the or to the institution, right? So therefore, avoid any one-on-one sort of personal, non-documented side conversations. You should not have side conversations with any of the directors. I'll give you a practical example of this. There was a issue. I mean, pretty early in my career. This is how you really learn for your mistakes at times, and I'm happy to sort of share that so that others do not end up having those mistakes. One fine day, some years back, an audit committee member, called me and said that, uh, what is your view on one, two, three things, right? And I gave my views, saying that yes, this is what should happen, this is what should happen, this is how it should be there, right? This was premature, right? Now, but I thought I was communicating as Ashish Gupta, not as Walker Chandiok and Company LLP. But the other person actually took it as a Walker Chandiok and Company LLP response and put down as as a formal response from the company from the firm. And when we went into the audit committee presentation, actually a week later, he cited that you've gave me these responses, but now you're saying y. So you told me x, now you told me y. Boss, why there's so much a difference. Then you realize that you're not interacting with an individual informally relating to a company. Yes, you may interact informally on economy, on politics, and on US elections and everything. That's fine. But any matter that relates to company, your audit, your procedures, it's institution asking questions to the institution and responses from the institution to the institution. Always remember that.
Yeah, right, right. So the next question is, can the MR letter include the matters being discussed here by you? And in case yes, will it be considered as being in compliance with this standard on TCWG?
So the management, first of all, management representation is not a substitute to any of the audit procedures or the procedures that you have to do under the auditing standards. Management representation essentially only secures you from the perspective that yes, the accuracy, completeness, integrity of the information is on the person who's given that information, right? Yes, you will perform certain procedures, but you're not performing forensic procedures. So if, let's say, if I have signed an invoice, of course, you'll verify that under the DOA that person should be signing, etc., etc. You've done your basic procedure, but you cannot, you're not investigating to the integrity of the information being submitted. I think that's where the MRL sort of helps you. So your communication with those charged with governance can be referred into in the MRL, but that is not really the objective of the MRL. The objective of the MRL is where the management, particularly the senior management, the CEO, the CFO, and at times the audit committee chair, says that yes, they are aware of the information or they're not aware of the information, as the case may be, and this is the following thing that they are aware. Is not a substitute. So if you're, for example, given it to the MRL, can you say that my communication is complete or my documentation is over? No, that's maybe just part of it. That's not it at all, right? That is not a substitute to the procedures that you would do typically under SA 260, for example. That is not a substitute to how you would document your communication with those charged with governance in your audit files.
Thank you. Next question is, in case of quarterly and or half yearly reporting audits, does this communication has to be mandatorily for each period of reporting?
Absolutely, yes. If you're doing either an SRE 2410 report, or you're doing an SA 800 special purpose audit report, or you're doing an SA 700 report, whatever report, or you're doing an SAE 3000 or SRS 4400, whatever report, wherever you're doing any assurance engagement, the understanding is that you have to follow the basic premise of auditing standards there. The basic premise is that the scope of the procedures that you perform, the procedures eventually that you perform, unless it's a statutory audit, or the timing of those procedures, if there are any issues arising of it, should all be communicated to those charged with governance. It is absolutely necessary. So whether you're doing a quarterly reporting or a 6-monthly reporting or an annual reporting, it is mandatory that you have a communication. Extent of communication would vary. So for example, you don't need to have a detailed sort of presentation that you typically have or communication for an annual audit in a quarterly basis. Like I gave you an example that you should meet at least once the board every year where you ask those 5-6 questions. You don't need to meet every quarter. Every quarter, you just have to meet once and ask them one simple question. What are the certain events that you are aware of that have happened in the quarter, and what's your view on them? That's one question. That's it on a quarterly basis. So communication mandatory. Extent of communication will vary depending upon it's a quarterly intervention or an annual intervention.
Okay. What about TCWG responses? Do these have to be in writing too? Or in case yes, how can you force the TCWG to give us written responses?
Yes, there are many circumstances where the TCWG may not want to respond in writing. First point, as much as possible, have it in writing. As I said, the basic premise in auditing is if it's not documented, it's not done, right? So if it's not in writing, you can't evidence it. So that's the first thing. In case it's not in writing, let's say you've had a oral meeting or a Zoom call or a Teams call, minute that. Instead of asking it, you minute it and circulate the minutes to say, these are the 5 people attended from your side, these are 2 people attended from our side. This is what we've discussed. We are summarizing it. Please let us know if you believe we have captured it appropriately. Otherwise, please edit it as the case may be by this date. Just put it there and leave it there. In case they have to edit, they will edit. If they don't edit, at least you have put down an evidence on paper to say that you've circulated the minutes the way you thought appropriately at that time. If nobody responded, then it's their problem, not your problem.
This is exactly what you do for any or every meeting.
Yeah, absolutely.
Next one is another interesting question. It says, what to do in scenario you find the full board of directors involved in a fraud or manipulation of financial statements? How to deal with such scenario?
Right. Uh, Again, a fairly loaded question. I'll take 2, 3 minutes to try and because it's a very, very important question in this day and age. First of all, where you have reasons to believe that substantial part or the whole part of the board is involved in acts of fraud. Again, I'm not saying you have to prove it, but even when you have reasonable causes to believe that there is something of this sort has happened, the first thing you should do is that you should write formally. And my suggestion would be involve a law firm in doing so. Write formally to the to the board, all of the board first. That's the first communication that this is what you've heard, this is what you've evidenced, this is what you're made aware of. Please ask them, are they aware of this or not? First, put that as a question back to them in writing. No calls, put it in writing. Right here, avoid any calls or minutes of the meeting. This is a straight write letter on your letterhead saying that you are made aware of this. This is the source of your information. This is what the information contains. What is your view or response in that? The board is likely to, of course, come up with a response, evaluate the response, then do your 143.12 assessment. If you believe that under 143.12, this needs to be referred to, and this is, as I said, the information of substance that causes you to reasonably believe that there is something of fish, write them back saying that, in case ABCD is not done, you would be compelled to write to 140 to the central government. Follow the process that is listed down on 143.12, because imagine a situation where this will go into a litigation scenario. So you have to make sure that every step that you do is 1, 2, 3, 4 in writing and precisely as per law. That's what I'm advising you. Please use a law firm in these circumstances, right? Now, after you've done your 143 12 situation, uh, evaluate very clearly the opinions or conclusions that we've issued in the past periods. Let's say something has come up in June quarter, you determine in July. The first thing, besides of course doing this communication, what you should also evaluate and assess is, was your March opinion appropriate? Were your previous conclusions appropriate or not? Right? It's a very, very complicated scenario. Trust me, when the entire, let's say, the board or the management is involved in either manipulations or whatever, in that circumstances, please be very careful. Follow to the T the process listed down on a 143.12 or the auditing standards. Consider everything in writing. Even if it's the smallest of the communication, put it in writing. Right. Third is evaluate all your past opinions for issuance or for reissuance or calling back, as the case may be, right? So these are 2, 3 things that you should do. Again, uh, here the circumstance could be very different depending upon how the board responds, etc. Then you should consider the further next steps, which could include, for example, writing to the shareholders, which could, besides 143, or which would also, of course, which will also include is resigning or stepping away from the audit engagement itself.
Hmm. Right. Next question is, what documentary evidence we have to collect in order to establish wrap up before conclusion of the audit report?
Oh, well, that's a really, okay, just confining yourself to just 260 right now, the audit evidence that you should accumulate is that you have communicated with those charged with governance at the planning stage. So you've had that discussion. What are the questions that you've asked of them? How those questions have been considered, responses have been considered in your audit planning? Have there been any special circumstances which required you to be having a more frequent communication with those charged with governance? What is the final audit committee presentation or the board presentation that you've made, where you've discussed each of those elements on auditor responsibility, independence, observations, etc., and sought their response? Basis all of that, are there any circumstances for you to believe that you have to either update your audit risks, update your procedures, or change your conclusion? If none of these exist, then your conclusion is appropriate. Go ahead and issue the conclusion. That's how you should just have one closing memo in your file which summarizes all this communication to like one single page with this conclusion on that.
Okay. In case of unlisted and private entities where no key managerial personnel is employed, the auditor may face difficulties in communicating with the directors as they may not be available all the times, or they may not be very keen to listen and understand from you the audit matters or the findings. In that case, would it be correct if the auditors put all such matters in his report and issue the same?
Okay. See, if you're issuing an audit report under 700, then the manner of reporting is defined under the framework. So it is a long form report, but it is not of the long form report like typically a bank's issue, right? So it's not a summary of all. It's not like an internal audit report where you put down all your observations in a single format and call them as an audit report. First of all, so in case the members are not willing to listen or whatever, what is stopping you from putting them down into your letterhead, saying that in the same manner, to say that as required under the standards, auditing standard SS 260, we are hereby writing to communicate the following with respect to our audit, and put that down 1, 2, 3, 4. Send out the communication to them if they're not willing to come on a call or listen or set up a meeting. Nobody is stopping you from issuing this letter and giving it on the on the registered office or to the compliance officer of the company. There would be a compliance officer or company secretary. If there's no company secretary, then there would at least be a CEO or a CFO or a chairman of the board. There'll be one board of directors who would have an email ID. Put it down, but you should not use it as an excuse in your files to say, I tried communicating, nobody was there, so I have issued a long form audit report, and that is, in my view, a compliance of 260. That's not a compliance of 260. That is not. What is compliance of 260 is your timing of communication, the form of communication, the fact that it's two-way. Even if it's not a two-way, you've at least attempted it to be a two-way, right? And so in your communication, write questions that we would like to set up a meeting with you to understand the following: 1, 2, 3, 4. In our audit procedures, we've not come across any other matter that requires 1, 2, 3, 4 to be any additional information. However, if you have any additional information, please provide it to us. Right? Give them 2 weeks or 3 weeks. So timing of that communication becomes very important. So, but please put it in writing. Putting everything in the audit report is not the solution. That's not the intent of the law also. The law doesn't say that, your true and fair view subject to, please read my 30-page audit report. That's not the objective. You're not the internal auditor. You're not issuing a long form report. The manner, maybe some statutes required, like the banks.
Right. Most of the documents are digitalized, say transactions of banking sector, online trading sector. So, how to ensure the audit quality and documents of our audit procedure?
Hmm. Well, this is not a 260 question, but this is more general again. My understanding is that uh, uh, the times are changing dramatically. Not just the scale of operations is increasing for our audit clients or companies in general, but also the manner they are capturing information, processing information, and presenting information is also changing, right? Gone are those days where you had a very simple, just one operation, unit operation. Everything was recorded in 50 lines and that's it, right? Your frequency of information has changed. Your quality of information has changed. The manner you're, as I said, processing, sharing, and storing information has changed. So you have to also change as an auditor to make sure that you're deploying adequate technology tools to be able to process all this information within a audit risk framework. So you've defined an audit risk framework that these are the areas what could go wrong. Let's say revenue may the cutoff could go wrong, inventory may valuation could go wrong, inventory may existence could go wrong. Company is maintaining digital records of how they're processing information related to revenue, inventory valuation, inventory existence, for example. You ought to have the ability to be able to read that information, test that information, validate that information, and reach to a conclusion. So that can only happen given the volume through technology intervention only. So use technology platforms to be able to do that. That's what will give you sufficiency of the procedures. Appropriateness you can define, but the sufficiency of the procedures can only be defined in this scenario through the use of technology. That's my sort of broad response.
Yeah, thank you. So I think that's the end of the questions in the chat box, and even I want to ask. I mean, I wanted to ask a couple of questions, but one you just answered, the use of technology. Probably one question from my side is uh, how do you deal with the disagreement with the TCWG? As in, while you detailed out and explained various aspects how to deal with the communication, but if there is a disagreement, so what is the piece of advice you would give to all the auditors, all the members?
A great question, Kapil. Uh, so I think first of all, understand and acknowledge disagreements are difficult to handle, right? So, and my first piece of advice is do not try and solve a disagreement all by yourself. Always lean on to experts within your firm or within your circle to help you deal with it. I'm saying that deliberately. It's more of a this thing is that at times we try and do everything ourselves and we end up having or making a mess of it. That's the first thing that you should do. Second is in disagreements, two things are always misunderstood or always commonly mistaken. One is the timing. Second is clarity. What is the underlying issue? Uh, First is the timing. When do you communicate when there is a disagreement? Do you communicate right after you're done on the date of your board meeting when you have to sign your audit opinion? Right? When do you arrive at that? When do you conclude that there is a disagreement? Right? That's a very important. When you say that yes, there is a disagreement, it can't be on the date of the audit committee or the board or the board meeting when they're adopting or about to adopt the financial statements. Right? It has to be discussed well in advance. So let's say there is an accounting issue where you believe that your position and management position are diverse. There's a disagreement. The management reached out to the board of directors and said that this is their position. The board actually agrees with the management, but you have a different view. When do you communicate that view, right? So the timing of that communication becomes very important here. So whenever you believe there is a disagreement that has happened with the management, right, call for the audit committee meeting right up front or have a conversation with the wider board as the case may be and explain them your side of things, right? That's very important. Second thing is that always attend to listen. Do not form your own view. एक होता है ना कि when you go you go with a premeditated mind कि मैं तो ठीक हूँ, दूसरा गलत है. Don't have that approach. Have an approach to listen. Yes, it could be very basic to say अरे यार ये तो मतलब accounting ऐसी होनी चाहिए थी यार, ये तो लिखा है accounting standard में, I don't know why they are taking a different view, right? Always listen to why they are taking a different view. They're also professionals. They're also sort of, right? Unless there is an ethical issue. I'm not getting to that. But if there's no ethical issue here, then value the disagreement as much as you would value your opinion, right? Value their opinion. So listen to them that yes, why and basis they are coming. Right? Do not respond and react in that meeting. Once you've had the listening conversation, circle back and set up another meeting, right? With those charges saying, we've heard you. This is the matter. We've heard you. This is our view, basis 1, 2, 3, right? If you think that you have a different view, you can have another expert, that's an accounting expert or whatever, a valuation expert or a tax expert from who can help you as a management or as a board to come up and support their view, right? Otherwise, this is where our view is. And if you do not correct this, these are the implications under the auditing standard. Explain to them, right? Now, I know whenever these things happen, egos get involved. That's a separate side of it, side of things. Best way to manage ego is never impose yourself. Listen to the other person. Have some patience. Timing is very important, right? And then the manner of sort of communication. Disagreements, do not straight jump. Even if now a disagreement is concluded, we have concluded, yes, we may be modifying our audit report, right? In the in your audit files, you should mention the views taken by the basis of the views taken by the other person. Very common issue, Kapil. I've seen scenarios where we just put down matter, our view, and conclude. We should always put down matter, their view, what has been discussed with the audit committee or the board, what is our view, and then conclusion on either a modification or we drop it, as the case may be. So disagreements, do not assume you can solve everything yourself. You should always attend to listen. The timing has to be absolutely immaculate. Don't give surprises to people, right? Fourth is documented appropriately, whatever has been the conclusion. Because imagine disagreements, if not handled well, will lead to disengagements. So the disagreement should not lead to a disengagement. Complete breakdown is what you should manage through this process.
Thank you, Ashish. I mean, the basic principles of two-way communication, but so important here. Uh,
Yeah.
Thank you. Very insightful. The whole session, full of knowledge. Big thank.
No?
Now I will hand over to Anil ji. Anil sir, over to you.
Anil, you are mute. Not able to hear the technical issue.
Can you hear me now?
Yes, yes, sir. We can hear you.
Thank you, sir. Thank you, Kapil ji. Thank you, Ashish ji. It was wonderful experience once again you to have you here, and you are so kind to give your kind consent, even having your busy schedule, and you have given your consent to deliberate for our members. And I know that topic is very important, and you have covered all the aspects relating to 360-degree aspects relating to TCWG and answered all the questions to our members. And once again, thank you so much on behalf of AASB of ICI for sharing your insights as well as knowledge to our members. Hope our members have gained a lot through your deliberation, sir. I also thanks to Kapil Bagadia ji for giving his kind consent to moderate in today's webinar and wonderfully moderated the webinar and coordinated with Ashish sir. So thank you so much with both the learned speaker as well as moderator for today's webinar, Ashish ji and Kapil ji. I also thanks all the participants of today's webinar. Thank you so much, Ashish ji. Namaste.
Thank you, sir.
Thank you so much, Kapil
Thank you,
ji.
Kapil, for excellent
Thank you.
moderation.
Thank
Yeah.
you,
Thank you, sir.
Ashish.
Thank
You
you.
Thank you
give
for
Good
your.
10 minutes
evening.
back to all the participants in your day-to-day
Yes,
schedule.
yes, yes. Good
That's our
evening.
value add. Yeah. Okay. Thank you very much. Thank you.
Okay,
Thank
thank
you.
you. Bye.
Hmm.